Welcome guys to video 11. So in this video we're going to continue with what we had been doing in the last video, only now we're going to talk about using our candle patterns with our trend lines and our channels. So as I mentioned in the last video, this one's going to be very similar to the last video in structure and as far as rules, but we're going to add one more element into that, and that's going to be trapping the price into making a decision. And then we're still going to use the same steps and the same criteria to look for entering a trade. So first thing we want to do when we're dealing with trend lines and with channels is we want to trap the price if possible. Now that being said, it's not always possible to trap the price. It's not always going to get trapped inside of like a symmetrical triangle or a wedge or some type of a chart pattern. If we can trap it, then we will. But we'll also be able to take trades strictly off of the retest of, say, the upper or the lower limits of a channel or a trend line. Okay, those are valid entries as well. We have many tools in our toolbox, and we always want to use the right one at the right time. So if we can, as I should put that in parentheses, if possible, trap the price. If not, make sure that you have price in some type of ascending or descending channel or following along some type of descending or ascending trend line, and then we'll look for price to react to those trend lines as we look for our entry. And this will all make sense. It'll all be much clearer when we go to the charts in just a second. Now, like I said, we want to force price into making a decision. Now, being rejected or retesting a trend line is also a way of making price or forcing price into making a decision, because it allows us to put very tight stop loss on a trade, because if it breaks through that trend line, then the trade is invalid, and we either need to adjust the trend line or look for price to go in a different direction. If not, the best case scenario is that it gets a kind of rebounds. It bounces off of that trend line or that channel wall and then continues into the direction that we want it to go, like straight into profit. Okay, doesn't always work that way, but those type of setups allow us that opportunity to have like really razor thin profit margins or stop losses, because we'll know almost immediately if the trade is not going to work out. And I'll show you what I mean when we go into the example. So we want to trap price into making a decision. We also want to identify, of course, the major player, as we did in the last video. We want to level up. We want to look at the time frame directly above our trading time frame. So again, if we're on the 1 hour, we want to look at the 4 hour and identify what is the overall trend. And I'm going to keep saying that until it's just ingrained in your brain. Trade with the overall trend. Then we want to look for exhaustion candles in that same world above. In that 4 hour time frame, in this example, we want to look and see, are the candles that are being formed by the 4 hour telling us the same story that we're seeing on the 1 hour? Okay, we looked at that a little bit in the last video. So, you know, if we're seeing a doji on the 1 hour, but we jump up to the 4 hour and it's not even a blip on the radar, it's still part of one larger engulfing candle that's going in the opposite direction. Like say we're looking to sell and it's part of one big large engulfing bullish candle, then it's not telling us the same story. We're getting a conflict there, and we need to wait and be patient and wait for the proper buyers or sellers to come into the market. And that's number 4. We need to verify that either buyers or sellers are in the market before we take a position. We want to look for a candle to close below or above the previous candle. If we're looking to sell, it needs to close below the previous bullish candle. If we're looking to buy, we want a bullish candle to close above the previous bearish candle. Okay, that's going to give us an indication that buyers or sellers are coming back into the market and that we can look to get into the market as well. Okay, it means that people have, that whatever price is at, whatever price is currently at, that's more than likely the best price that we're going to get out of that retracement. Okay, it's telling us that the pullback is ending and that the overall trend is resuming, and that price right there is the best possible discount or premium price that we can get for that currency and for that trade. It's not always true, but it's a good indication that we could possibly be getting in at that time. And that's what we want to look for. And a big indication of that is engulfing candles. It's obviously going to need to engulf either in a single candle or in a pattern like evening star or a morning star. Okay, that's why we learned those formations, is because they come into play as we're looking to enter our trades. Okay, so let's take a look at the charts. Let me see if I can find a good example. Let's see, what was Canadian dollar franc. Let me see if I can find something. Yes, this looks good. Okay, so we're going to start with either a trend line or a channel, and this looks like a fairly good channel. So start at the peak and we'll go down. Okay, we need to adjust as we would in the real world. So we're coming down, down, down. Oh yeah, looks like some nice taps there. So put that there, pull it down to the lowest point. Okay, had two nice taps right there. As a matter of fact, for if you're a counter trend trader. So now we have our channel. Okay, we'll say we're up to here currently. Highlight this. We'll say we're about to here. So we have these 2 points creating our channel. When it came down here, this formed our lowest point. Up until that point, this was the bottom of the channel. Okay, does that make sense to everybody? This is just channels 101. Nothing special about this right here. This is on the 4-hour time frame. Okay, so what we're waiting for is a retest of this upper limit. Okay, why? Because we're in a seller's market. Okay, the major player, because of all of this, okay, way below this previous low, it's broken that and then some. So we have our major player. We know he's a seller. We've got this descending channel, so we're going to look for retests of the upper limit of that channel. And it's either going to do one of two things. It's either going to break, like this one here broke above this, but we would have been able to use that as our stop for that trade. So it's not out of the question that we still could have gotten profit out of that trade. It's just when this moved the channel up, this no longer became relevant. Okay, so let's see what we can see as far as trade wise. Hold on one sec. There we go, and it's Hollywood magic. Okay, so let's drop down to the 1 hour. We don't want to get too far ahead of ourselves. And let's look at that very first retest that happened. So we know that this right here, that is our highest high, that our lower high that made the second point of this channel or this trend line. And we had price come down, and then we have this first retest. This is a nice exhaustion candle on the 1 hour here that's showing us that this could be a possible entry for a sell. So we have it testing the upper limit of this channel. Then our follow-up candle is this nice engulfing. Okay, so we've got two things going for us already, three actually. We know our major player is a seller. We have an exhaustion candle forming, even though it's a bullish exhaustion candle. It'd be much happier if it was a bearish exhaustion, but you have to take what you can get when you're trading. This one's bullish, but still got a very nice long wick on it, really good shooting star candle there. Then the follow-up candle was our bearish engulfing. This one. So then once we have that, we want to jump up to the 4-hour time frame and look and see, can we trap price, or is it, which we can here on the 1 hour. Sorry, let me back up. First of all, we need to trap price here on the 1 hour. We need to jump up and see, what does this candle look like on the 4 hour, and are we still seeing the same thing? Because if we are, this close right here, jeez, I'm horrible at drawing these, is, let me do it this way. So this close below this previous bullish candle is going to be our entry. So we need to do our quick top-down analysis. Okay, we jump up to the 4 hour and let's take a look. What does that look like on the 4 hour? And it looks almost identical. So we have this same exhaustion candle, just barely missing the upper portion of this channel. And then we have this same bearish engulfing candle closing below this candle. And if we were to have trapped price on the 1 hour, okay, it would have looked something like this. Which this breaches. It closes not only below the bullish candle, but it also breaks through that counter trend line that was trapping price for us. Let's take a look at the 1 hour. See how that would have played out. Yep, there you go. Same trap. Okay, we've got that counter trend trade going up, or not a trade, but our counter trend line going up, breach, and then continues to drop. So on the 4 hour, we were getting the same engulfing, only it was because of these 4 candles. These 4 formed it to, had it engulf all the way down. But we get our more precise entry on our trading time frame. We saw that this candle was still a valid exhaustion candle. This candle closed below that, and so we're good to take that entry. Now, when we take that entry, what? All right, sorry about that. Okay, we're going to have a little bit larger risk to reward because this is a very big exhaustion pin, and if we want to set our stop loss, it needs to be above this level, because if price comes back up and breaks through this trend line, then we know that the trade is invalid. So for this short trade, enter right here. Stop loss is above this pin, about 5 to 10 pips, so we have about a 50 pip stop loss, which is still fine for a swing trade. And then that would have netted us over 160 pips. Okay, so a very, very nice 3-to-1 risk to reward, or 3R trade. And it really doesn't get much better than that. And you see how easy that was. All we did was trap the price, wait for the right candles to show up, checked with our major player, took the trade, and this trade took almost 0 drawdown. We had about, we had it come up here, kind of freak you out, do a quick push up in the beginning of that first hour, but then it was just all drop city from there. And it came all the way down, and actually we would have had a great exit here because the exit was the bottom of the channel. I mean, once it started throwing pins to the bottom of this channel trend line, then you're definitely going to want to get out, because if it goes any further, then you're going to have to widen out the channel. But this is a perfect entry anyways, because you had, like I said, a 3R trade, and you just can't be unhappy with that. Secure the bag, move on to the next trade. Now let's look at the next trade, and that opportunity would be at the next retest of the upper limit of the channel. Okay, again, so we have this retest of the channel. We can easily trap price with a counter trend line here to here. Okay, and now we just need to wait. We get a second and a third retest here and here, and once it breaks this counter trend line, once it breaks this trapping of price, then we know we're good to get in. If it would have broken out here, we would have had a little bit of a wider stop loss, but because it ranged for a little bit, it actually helped us out and gave us a beautiful, beautiful entry. So we jump up to the 4-hour. Oops. So we jump up to the 4-hour here, and we see what is the world above us telling us. Do the candlesticks still tell us the same story on this trade? And they absolutely do. See, on the first retest, we actually had a bullish exhaustion candle. Okay, so we would have want to waited minimum for this candle to close below it, which it did, but it still wasn't the right time to enter. It ranged a little bit, and then here, when it made, again, a beautiful evening star formation, here, broke below, this is our entry. So we jump back out to the, or back down to the 1-hour, and then that's when we actually want to enter our trade. So let's take a look at what the candles look like there. Okay, and so here, right after this bearish engulfing, which, as I said, closes below the previous bullish candle. Okay, you see how, what I mean by it needs to close below the previous bullish if we're looking for a sell. Once that happened, we were good to take a sell. Enter here, stop loss right above the last swing high. You could either put it here or even here, depending on your risk appetite. 35 pips is generally industry standard. You should be fairly safe, especially since it's outside of this channel. And then from there, again, it was just drop city. And we actually even had a second entry right here. Move this over. You could have scaled into a second position there using the equity that you had already built up in this first trade. And yeah, and then that dropped down for 120 pips. And again, that's actually a, I was going to say it was almost a 4R, but that's another 3R, 3.5R with zero drawdown. Again, with zero drawdown. Now, it's not always going to go this smoothly. We're just using these as examples, but you can see when we know what to look for in our candlesticks, we're not using the candlesticks to say, oh, this is a evening star, so it's definitely going to reverse from this point, or oh, these are railroad tracks, so it's definitely going to reverse from this point. No, we're using our candlesticks intelligently, which is something that most of the retail traders don't do. They just want an indication, just can I buy now? Can I sell now? Can I jump in the trade now? And those are the traders that you'll be taking money from. because we know how to be patient, we know what to look for, and we know which candles to take a trade on and which ones to not even bother with at all. You know, when traders see, um, what's a good example? When they saw this right here, let's say that this candle hadn't shown up yet. That's not even there. When they saw that, and price is making lower highs, and it's in a downtrend, so it's obviously going to go down, right? It didn't. What did it do? It came back up, went down a little bit, and then back up to where we already knew price was eventually going to go, and we were only looking for price to react at this point or at this point. Once it hit this bottom, it was just a matter of time as it made its way back up until it hit this top, and then it started to drop again. Okay, and that's where we're going to make our money. And this should be the bread and butter of your trading strategy, is looking for price to hit these levels and then show us that either the buyers or the sellers are in the market, that they're ready to continue the overall trend, and then we just ride those coattails into profit. Okay, we don't have to be market wizards, we just have to trade with the people that are. And these traders, when they see stuff like this, they wait for a better price, and this up here is the premium price. This is the discounted price. Once they finally get that, then they say, okay, we're good, we've got all our orders, now it's time to drop. Okay, hope that makes some sense. Okay, I hope that you're starting to see the market in a little bit of a different way. I hope I'm opening your eyes here to see that there's so much more going on in price action, and this is why price action is really the only way that successful traders trade, because it's not about the indicators, it's not about the arrows or oscillators or anything like that. If you just take the time to look at price and to read price, it's going to tell you everything that you need to know, because it's showing you the psychology of all of the other traders that are in the market. And the other traders are relying on indicators to tell them when to jump in, and those are the ones that are losing money. And the rest of the smart traders, the 5%, the group of traders that you are now trying to be in, that you will very soon be in, that top 5% that actually make money, we're waiting for them to push price up and to give us a fire sale. Okay? At this point, Canadian dollar, Swiss franc was on Black Friday sale. It couldn't have gotten any better. We took advantage of it. We got that doorbuster, and then price just dropped out of the sky. Everybody else's stops got hit, and we went straight into profit. Okay? All right, I hope that clears that